And now our top line story. Here's a look at the U.S. futures market on a Monday morning when investors around the world are digesting the latest news on Credit Suisse, the troubled Swiss banking giant. The bank will be taken over by another big Swiss bank, UBS, in a deal brokered by the government of Switzerland and assisted by the Swiss National Bank. Meanwhile, in a move that brings back memories of the great financial crisis of 2008, 6 major central banks, including the Bank of Canada and the U.S. Fed, are taking coordinated action to boost the availability of U.S. dollars to banks in their countries. It's another move intended to instill confidence in the global banking system. And here is a look at key European indices where regular trading is underway. We'll speak with a longtime observer of the European markets in just a moment. But first, let's go to the Bloomberg News Bureau in London, where Sylvia Klimaki is standing by with the latest details. Sylvia, what can you tell us? The eyes of the investing world very much on your part of the world today.
Hello from London, Paul, and what a morning, what a weekend. The Stoxx 600 index is sparing some of its earlier losses after it dropped 0.7% earlier this morning, with a sub-index of banking stocks wiping out its remaining gains for the year. ING dropped as much as 6%, while French bank Société Générale was down almost 4%. UBS shares fell as much as 16% earlier on, while Credit Suisse sank 60%. The anxious start to the trading week prompted a flight to safety here in Europe, with German and UK government bonds rallying this morning.
And there are certainly holders of one series of Credit Suisse bonds which have been wiped out or very close to it. How are investors reacting to the action in the bond market?
In a move that shocked credit markets, Paul, Credit Suisse with $17.2 billion of risky bonds are now worthless after the takeover by UBS. The deal will trigger a complete write-down of the AT1s in order to increase core capital. And this is something the Swiss financial regulator FINMA decided over the weekend. At the same time, the bank stockholders will still get something back. They're said to receive 3 billion francs. And this arrangement is controversial in that it violates the standard corporate finance pecking order. In a textbook write-down scenario, shareholders are the first to take a hit before AT1 bonds face losses. And that's why the decision, while it strengthens the balance sheet of the newly combined bank, it provoked a furious response from some of the AT1 bondholders. Credit Suisse was one of the first banks to issue those AT1 bonds that were actually introduced after the global financial crisis and are designed to be among the first to feel the pain if a bank's troubles get bad enough and to protect taxpayers. Now, the wipeout has shaken a $275 billion market for bank funding, and Goldman Sachs says it is ready to start trading claims in Credit Suisse's AT1s. Now, these bonds issued by other European lenders plunged this morning, with investors going through the fine print of their holdings to understand if authorities in other countries could repeat what happened in Switzerland. According to Bloomberg Intelligence, a total write-down of additional Tier 1 bonds, as happened over the weekend at Credit Suisse, is not the norm, with risky bonds at most other banks here in Europe and the UK having more protections.